guys, and welcome back to another Money Tip Monday. Today we're back and I want to talk about a super hot topic for me, and that's how to shop for your home loans. Now, if you're a new subscriber to this channel, I want to let you know that my biggest goal here is just to teach you practical money tips to help you make smart home purchases and smart investments. And if you're a returning viewer, I just want to say thank you so much. And don't forget to like, comment, and subscribe so that you can keep getting all of these awesome money tips. Now, to jump right into this, what really has the hair up my butt is that there is so much crazy marketing and misinformation out there on how to shop for your home loan, right? People in general are just talking about lowest rate, lowest rate, lowest rate, lowest rate. And a lot of consumers are buying into that and not knowing that they're paying big discount points or potentially just putting themselves into the wrong mortgage loan product, right? And so even though it's the cheapest rate, it might have high mortgage insurance, or might have upfront mortgage insurance, or might have finance costs that you are not thinking of and might cost you more in the long run, right? So as somebody who's done this for 16 years, I think that there's 5 things that you as a consumer need to do to protect yourself and be aware of when it comes to shopping for a home loan. Now, my very first tip is probably the one that has the most impact, and that is finding a mortgage firm that actually does strategy based upon your life goals. So most people, what they do is they call in, they talk to a loan officer, that loan officer gives them whatever scenario they called in about, and then will issue a pre-qualification letter. Now, there isn't enough information, or there isn't enough time really in that initial conversation to actually plan out any strategy, right? So when you call into my office, we'll definitely take some intake information, like where you've lived and worked for the last 2 years, income, asset information. We'll run a credit report and ask you about any real estate that you own, right? So I'm just trying to get an overview of your finances, right? And then what we'll do is we'll set up an in-person or Zoom consultation where we're really breaking down what are the life goals? How long do you plan on living in this home? What's the thing that's going to impact you most? Is it cash to close? Is it monthly payment, right? What price point are you looking in, right? And how long do you actually plan on being in Arizona, or are you planning on being in this job? Like, what do you want to be in 5 years? All of these things are so vitally important to what type of mortgage you get, because your mortgage is your largest financial obligation. And so if the person that you're calling into or that's assisting you with your mortgage isn't, helping you with any strategies or providing multiple scenarios for your finance, right? I can tell you that they are not a mortgage advisor. They're just somebody with a mortgage license, okay? And so yes, they can write your loan, but how would you know that that's the right loan for the long haul? There's so many different ways of structuring a loan between mortgage insurance, interest rates, discount points. I mean, overall, like terms, 30-year, 20-year, 10-year, 15-year. I mean, there's so many different ways to make up a home loan, right? How do you know that the one that you called in about is the one that actually makes the most sense? Now, the second biggest mistake that most consumers will make is actually shopping based on interest rate alone. So I will have people call into the office and they'll say, tell me what your lowest interest rate is. And it's a really loaded question because interest rate is impacted by a variety of things like your credit score, your occupancy, the type of loan, whether it's backed by the government, whether it has mortgage insurance. And so it's really hard to answer that question when you call in. I will tell you that if you're talking to the wrong person, they can underquote you. And then later on, once you take your mortgage application, you'll find out that the loan terms that they quoted you were different than what you expected. The other thing is that you'll get a variety of different answers on that based on people's personal money mindsets, right? So there are people that would never pay a discount point. So the lowest rate that they'll quote you is actually one without a discount point. And then there are people that are like, oh, you asked me for the lowest rate possible. I'm going to tell you what that is, but I'm not going to tell you that it comes with 3% discount points, okay? Now, I see the gambit of that, which is why I think your initial phone call is just to take information, and that we should present to you a variety of different scenarios with buy downs, with mortgage insurance, plans, and then with just the different various types of loan financing available. Now, the third thing is when to shop interest rates, okay? So I have clients who will call in and they'll do their due diligence over the course of a week to a month, right, to several weeks. And I will tell you that if you're gonna do apples to apples loan comparison, you need to shop every single lender on the exact same day, preferably within like the same 2-hour period, because the market moves and changes every single day. And like last week, I had mortgage interest rates start at a certain percent. Something happened with the China tariff situation, and then all of a sudden we had a price reduction in the end part of that day. Now, somebody who talked to me earlier in that day got quoted a higher interest rate than somebody in that later part of the day. So it's very, very important that you shop people on the same day and practically the same time, if you're really wanting to do an apples to apples comparison. Now, the fourth thing you really want to consider is the duration of your transaction. So is this going to be a 30-day transaction, a 45-day transaction, a 60-day, or is it going to be new construction, which can go on anywhere between 3 months to a year and a half? And when do you do your shopping? Okay, so typically you'll want to shop, I would say probably no more than 5 lenders. I mean, I think that's actually very aggressive. I would say shop 3 reputable lenders if you're going to be shopping for your home loan. And you want to do it at the time that you're going to get under contract, unless it's a new construction loan, okay? So you'll want to do your shopping at the very beginning, but then you may want to consider, doing shopping again when you're 60 days out from closing on your home loan, because that's, a good lock time frame. Now, the longer you lock your interest rate in, the higher the cost for that. So you do want to keep that in mind. But in interest rate markets that are very volatile, or where you hear the interest rates are, creeping up, a longer lock term is really important. So you just want to be very, very aware of what your options are with new construction. The same thing is that the shorter amount of time that you lock in your home loan, the better typically the costs are, right? So a 15-day lock will be cheaper than a 30-day lock, 45-day will be more than a 30, and a 60-day will be more than a 45 and a 30, okay? So just be aware of that. Now, a lot of these internet banks that offer the cheapest interest rate available will typically lock you on a 30-day lock, and they don't disclose to you an extension cost, right? So their goal is to get your home loan done in 30 days, but if it extends past 30 days, then they charge you for that rate lock extension. Rate lock extensions are normally 0.25% of your home loan, right? So on, let's say, a $100,000 loan, this would be $250, okay? Now, those things can add up because most internet banks right now are processing loans in 6 to 9 weeks, especially if you're refinancing. So you definitely want to be aware that a lock term will have an impact on the cost and your interest rate. Now, the final thing that you're going to want to consider when you are shopping for your home loan is reviews. And I would specifically look for reviews of your loan officer, because, right, a mortgage bank is going to underwrite hundreds to thousands potentially of mortgage loans, and they're going to have a variety of different reviews online. I can tell you that some of the bigger mortgage banks and bigger mortgage companies, right, will have hundreds of negative reviews because they underwrite thousands of home loans, right? An individual loan officer will not have that kind of impact, right? Their personal clients will go online to review them. And so you will see if they don't have very many reviews, that's not a good sign. If they have lots of negative reviews, that's not a good sign. You're looking for a healthy amount of reviews for how long they've been in business. And then you're looking for, like potential red flags, like if they only have positive reviews. Even I, who've done this for 16 years, I don't have many negative reviews, but I think I have like a couple of 3 stars, which, I'm not proud of, but they've definitely helped my team get better. If you only see 5-star, 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 5-star reviews and 0 negative, and this person's been in business for a really long time, chances are there's something sketchy with that, or they're perfect. Now, why reviews are so important is because you're really going to understand their financial philosophy and their customer service philosophy, okay? If they're somebody that really advocates toward their clients, if they're somebody that really goes above and beyond, you will read that in their reviews, okay? It's not just gonna be a 5-star with no commentary. You're gonna see people who write paragraphs on how their loan officer really had their back. Buying a home is the second most stressful event in a person's life, second to death of a family member when it comes to short-term deadlines, okay? And underwriting is hard. They nitpick people. I mean, they want to know every single thing about your finances because you're borrowing a large sum of money from a bank and they want to make sure that you're going to pay them back. Okay? I mean, that's just how it works. So if you're in a scenario, right, and you're going with the cheapest person online that doesn't have any reviews and you have a hard time in underwriting, right, is that person going to know what it takes to get your home loan done? Do you really want to toss the dice? Right? It is your largest financial decision, and you should make sure that you're going with a quality, reputable person that is going to go to bat for you in case underwriting gets a little tricky. So these were just my 5 best tips on what you should do if you're shopping for a home loan, and they don't all have to do with rates and fees, guys, right? You want a competitive interest rate, competitive fees with somebody who knows what they're doing, right? Because in the long haul, that's really what's going to save you the most money and make it the best financial investment for you. So thank you guys for tuning in to another Money Tip Monday. I love and appreciate you, and continue to share this awesome channel with friends and family that you know of who might be shopping for a mortgage loan today. We'd love to hear from you guys.